Hi, I'm Richard Story and I'm an Associate Director in the Financial Regulation team at Deloitte Legal. We work with a broad spectrum of firms that operate within the regulated sphere, and increasingly we've seen that this concerns FinTech firms looking to launch innovative products or services. Many of the FinTech firms operating in the UK will find themselves carrying out activities requiring regulation, and the consequences can be severe if they do so without permission. I'm going to give you a very quick overview of the types of matters that are broadly relevant here, and hope that this provides you with a sound basis to start thinking about how regulation might apply in your case. So firstly, the regulatory framework. As a start, there is no separate UK regulatory structure or single set of rules for FinTech firms as such, and they're regulated mostly in the same way as traditional financial services firms. If they're undertaking activities that are regulated, they will need to be authorised by the Financial Conduct Authority, the FCA, or the Prudential Regulation Authority, the PRA, and sometimes by both. Once authorised, they're allowed to operate within what is known as the regulatory perimeter. There are various potential pitfalls in understanding the regulatory regime. For example, businesses that promote unregulated crypto assets will be subject to financial promotion restrictions in the UK, even though the products they deal with are not themselves regulated currently. Moving on, the nature of regulation. The government and regulators create laws, rules and guidance as to how firms are allowed to operate within the regulatory perimeter. These are technologically neutral. This means that they are not fixed on one technology or one approach as the only way to operate. This means that FinTech products and services can be caught by regulation even where the relevant regulations were created prior to the introduction of a new technology or service type. Looking at the regulatory approach, given limited resources and the pace of change in FinTech, regulators globally, including in the UK, will often wait to see how new technology and innovation develops and react where risks emerge. So when rules are introduced that impact FinTech firms, rather than applying across the industry, they're likely to operate in a more localised fashion, seeking to address particular risks or issues associated with a product. An example of this is the FCA's ban on UK firms marketing, selling or distributing any derivatives, including contracts for differences, options and futures that reference unregulated transferable crypto assets. Regulators sometimes find it hard to keep abreast of new and rapidly developing technology, and the opportunity to misunderstand how a new product or service operates often arises. Making sure the regulator understands your product is very important in helping to make sure you avoid unnecessary delays or regulatory action where it is not warranted. Looking at the regulator's concerns, regulators are aware that FinTech firms may grow very rapidly and go from tiny to huge within a very short space of time. From the regulator's point of view, this increases the risk of shocks to the market when things go wrong, upsetting financial stability and the potential to cause consumer detriment to ordinary customers, investors and so on. In order to spot harm and address it at an early stage and help firms that might have less experience and resources to understand the regulatory environment, the FCA has recently launched its Early and High Growth Oversight Initiative. This is basically a regulatory nursery to keep a closer eye on some types of newly authorised firms and help them transition into well-developed and hopefully lower risk regulated entities. Areas of regulation that will potentially be relevant to a FinTech business include AML, including digital identity, payment services and e-money regulations, data protection, open banking, regulation of digital assets and distributed ledger technology, financial promotions and marketing, client money and safeguarding, and insurance regulation. Looking at the best approach for FinTech firms, FinTech businesses often operate on an accelerated timetable when it comes to marketing, securing capital and growth. This means that the time, opportunity and resources to consider whether and how your firm may operate within the regulatory perimeter can be very short and is often missed. FinTech startups often struggle to navigate the legal landscape and work out if their offering is going to breach the regulatory perimeter. Getting good legal advice, which has an understanding of your product and the challenges that you face, is absolutely key to success in this area. So that is a really quick whistle-stop tour of some high-level issues affecting the regulation of FinTech, but hopefully it gives you an understanding of the types of things that you're going to need to consider.